Greetings everyone. Let's take a look at how to figure out the cash flow. It's going to go to the creditors. So basically we're trying to figure out the amount of interest and whether or not we have to continue paying more or less for our borrowing our long-term debt. So first question is, what is the interest paid? Well, that's a pretty fun question to answer. They've given us that answer right here. Okay, so we're paying $18,000 and $600 in interest. And the next part is we need to figure out, again, whether or not we have an increase or decrease in our borrowing. So we're going to take a look at our long-term debt. Okay. Now, in terms of the formula, our net new borrowing is going to be our ending long-term liability minus our beginning long-term liabilities. Okay, so we have that information in our balance sheets. Let's just get a little bit more clear here. So when we look at the ending long-term liability, that's going to be our 2017 value. And our beginning long-term liability was at the beginning of the period, which is our 2016. So we're going to take the difference here, and then again we'll figure out whether or not we're borrowing more or borrowing less than we did in the previous year. So it looks like we're actually borrowing less this year. Okay. So now that we have our interest expense and we know our net new borrowing, we can figure out our cash flow from creditors. Because if you remember, cash flow from creditors, this equation here, okay? But let's go ahead and put in our number here. So it's a negative value, 27,800. So finally, our cash flow from creditors is going to be our interest expense, which is the 18,600. minus our net new borrowing. Okay, so it looks like we have a total here of 46,400. Wonderful. Happy financing.